Welcome back. Now let's revise miscellaneous provisions and advance ruling. Now let's see some of the main points in miscellaneous provisions. See, first one is presumption of documents. The law presumes that any document which is found with the person belongs to him. That means the party against whom this presumption is made, he will have to prove that the document does not belong to him. In fact, the truth of the document is also presumed. So he will have to prove that whatever is written in those documents is untrue. Signature or any initial done is deemed to be his. He will have to prove that it is not his. Presumption of document only means that the law is putting the burden of proof on the taxpayer. Then, microfilm is admissible as evidence, microfilm, etc. Facsimile, fax copy, computer printout, all these are regarded as evidences under the GST law. Can the department commissioner call for information? Yes, they can call for information. In fact, this information can also be called from the GST network, saying that some specific information which is required in relation to industry analysis or other datas which are available with the GST portal. Plus, there is a bar on disclosure that this should not be publicly disclosed until and unless it is required for some particular proceeding which is to be carried out. Other than that, it should not be disclosed as a matter of practice. Then, consent based sharing of information. This is new. Government has added this consent based sharing of information. Now what happens in this is, say suppose you need a bank loan. Now if you need a bank loan, there's a lot of documentation which you will have to give to the bank. They'll ask you your GST turnover, they'll ask you all the returns, they'll ask you all the e-way bills generated. Now, giving all these in hard copy becomes very painful, because say suppose you have applied for a loan with 4 banks, then you have to give all these documents to those 4 banks. Now, what the government has done is, there's a provision where the supplier can give a consent on the GST portal, and GST portal will share that information to the bank. This is done through a RBI subsidiary as well, public tech infrastructure for frictionless credit. So what happens here is, the data is stored in an open network, and then from there the data can be accessed by banks as given by you with the consent. Now, why is this section introduced? To save GST portal. See, say suppose there is a leakage, then in that case GST portal should not be taken to court saying that GST network has done the crime and I had not given my consent, how did they share it? That's why the law now provides that once the consent is provided, then the data can be shared. Now be very careful of one particular point. This data which is shared, supplier will share it. Now that supplier data of GSTR1 will also contain data of the recipients. Now what about that data of the recipient? Should the consent of each recipient be taken? The same section 158A provides that if the supplier gives consent, then it is his responsibility to take consent from all the recipients. It is deemed that he has taken consent from all the recipients. It cannot be questioned. Otherwise, recipients would have filed a case against GST network that how did you share our information without asking us for consent? Supplier had given consent, not we. But now, once the data is shared by the supplier, it is deemed that supplier has taken consent from all the recipients. So if the recipients have a problem, they have to file a case against supplier and not against GST network or government. Two people are authorized to accumulate data based on this consent. One is account aggregators, and second one is public tech platform for frictionless credit. Basically trying to reduce the paperwork and flow of information should be much easier, and there should not be any liability on GST network. Then publication of information. Say suppose there's a tax evader. Now if there's a tax evader, can that information be shared by the department in newspapers? The answer is yes. Publication of information is permitted. Who can do it? Commissioner, whose names, director, partner, whoever was involved along with the company. Is there a bar on publication? Yes. Say suppose the time limit to file appeal is not over, or the appeal is ongoing, then in that case there is a bar on publication of information. Otherwise all the details can be publicly informed. Okay, common portal, you are aware, GST network is the common portal, plus e-way-bill.gst.gov for is the common portal for e-way bill. Then assessment not to be valid in certain cases, invalid in certain cases. Now say suppose there is a error, mistake or omission in the notice, assessment order or any of the proceedings which are going on in GST, it will not be invalid merely because of that mistake, omission, if it is correct in substance. So what government has done is, in this provision they have relied on substance over form. So say suppose the department does a mistake in the notice, then that notice mistake will not make the notice invalid on that ground. That means what has to be seen is substance over form. Is it, sir? Yes. Plus there's one more section which is without prejudice to this. That means first they are saying that error, mistake, omission will not make the notice invalid, will not make the assessment invalid, and in the next section there is a point where they can rectify the errors, which is a mistake apparent from record. If there is a mistake apparent from record, then that can anyways be rectified. Is it, sir? Yes, rectification of mistake is permitted by any of the authorities. It can be done, it should be brought to notice within 3 months, and rectification should be done within 6 months. But if there is a arithmetical error which is apparent, very clear, then in that case it can be done any point of time. So one, they have the power to rectify. Even if they don't rectify, still assessment will not be invalid in certain cases. Then power to issue instructions. Power to issue instructions. This is the power available to the board. CBIC can issue instructions to the officers. These are in the form of circulars. These circulars have binding effect on the officers but not on the taxpayers. One important point, anti-profiteering measures. What is anti-profiteering measures? Say suppose there is a reduction of tax or ITC is available. Then in these two cases, if there is a reduction of tax, the benefit of that reduction of tax should be passed to the consumers. If it is not passed, benefit is not passed to the consumers, then in that case it is considered to be profiteering. Now to stop this profiteering, government has come up with anti-profiteering measures. Now till 1st April 2025, Competition Commission of India is empowered to examine these cases, and after that principal bench of appellate tribunal. Appellate tribunal, principal bench is now a authority which can take up anti-profiteering adjudication and examination. Adjudication and examination can be taken up. CCI, Competition Commission of India, will not accept any application beyond 1st April 2025. That is already incorporated in the law. Sir, what all actions can be taken in case of anti-profiteering measures? See, they can tell the supplier to reduce the prices, refund the amount, pay interest, and they can also cancel the registration of such person. So very wide powers, plus penalty up to 10% of profit earned amount, but if the taxpayer pays within 30 days, then in that case penalty will be waived off. There is a screening committee, state level screening committee, which will look at the applications. Then there is a separate committee for giving the case to the DG investigation. That DG, Director General Investigation, would complete the investigation and give the report, and after that these are the orders which can be passed by the anti-profiteering authority. So that's the basic task of anti-profiteering authority. Now the next one is apportionment of tax. Basically we are talking about IGST. We will do both these sections together: apportionment of tax, transfer of IGST. Now see, whenever IGST is charged by a supplier, that IGST which is being charged either is available as ITC or not eligible as ITC. Now what can be the cases where it is not eligible for ITC? Unregistered person, composition dealer, or block credit, or used for exempt supply. And these cases can happen even in case of customs, where customs you pay custom duty and there is a inbuilt IGST also. So see, if it is available as ITC, or say suppose last date to avail ITC is expired. Now say suppose ITC is eligible, then in that case it is not split half central government half state government. No, it continues to be ITC, and then once you use I against CGST, then to the extent, say suppose you had 100 here, you have used 50 to pay CGST, then central government in their IGST account will transfer 50 rupees to say central government's account. Same way, if it is used to pay SGST, then this 50 rupees will flow to that state government. This is called as transfer of IGST. So whenever IGST is used to pay C or S, to the extent it is used to pay C or S, it will be transferred to that central government or state government. That's why the law uses this terminology. First use I with I, then I with C, then I with S. Only then you can go to CGST ITC and SGST ITC. So I has to be used first, because the way in which you use I, it will be distributed to central government and state government. Sir, what about this? Is usage, be very careful. Usage of ITC. This can be 40/60 also. This can be 30/70 also. This can be 60/40 as well. However you use IGST, it will be transferred. Now cases where you are not eligible. Now this becomes a direct profit to government. Here half will go to central government, half will go to state government. which state government will get half? And if it is related to union territory, then it will go to central government. Now which state government should get this? As declared by the supplier. Supplier declares it in his GST return. Sir, what if he has not declared in his GST return? Then supplier would have sold to 4 states. Now based on these 4 states, say suppose he has sold to Karnataka, Maharashtra, Delhi, Gujarat, and he is from Daman and Diu. So it will go to Karnataka, Maharashtra, Delhi, Gujarat in this proportion. Sir, say suppose we don't know who has paid this IGST, because we are talking about lakhs of crores. We are not sure who has paid some amounts. Then what to do with that? It will be divided to all states based on preceding financial year tax collection. In that proportion it will be divided to all states, and whatever is the share of union territory, that will go to central government. So this is how the division takes place. This is called as apportionment of IGST. See, the moment ITC is not available, then in that case half will go to central government and then half will go to state government. Which state government? Say suppose supplier is from Daman and Diu, or I'll keep it as supplier is from Tamil Nadu. Then that half will go to the reporting being done. Say suppose the supplier of Tamil Nadu says I have supplied to Karnataka, Maharashtra, and this portion is available. You'll go by the proportion which is given first. Second, if proportion is you are not able to find how much he has supplied, then he would have supplied to 4 states based on that proportion. If that is also not available, for some IGST we don't know which supplier has paid it, then it will be transferred to all these states based on preceding financial year tax collection of that state. Clear with this? Yes. Okay. Then you have a point called as force majeure. What's force majeure, sir? Say suppose there is a event like COVID-19 pandemic or epidemic or flood, drought, and in that case the timelines which are given in the law may be extended by government, and this is a emergency power. Say suppose the timeline to file refund application, timeline to issue show cause notice, timeline to file GST returns, all these due dates can be extended by government by way of a notification. This is the power which is available to government. Then we have a discussion relating to advance ruling. See, how does the advance ruling work? See, first we have advance ruling. What is advance ruling? Getting the ruling in advance, and it can be for a existing business or for a new business. So it doesn't matter whether you are doing it as of now or you are going to do it later. Authority for advance ruling is empowered to give your advance ruling. How will the process work? First you will file the application. Then it will be forwarded to department. Then they will give a reply. Then the authority can either accept it or reject it. Sir, can they accept or reject also? Yes. See, say suppose something which is already pending in a court of law, then authority for advance ruling cannot give their decision. Or say suppose a court has already given an order, then authority for advance ruling cannot give its order. And finally they will pass a order within 90 days. Sir, what if I am not happy with this order? Then you'll go with AAAR, appellate authority for advance ruling. You get 30 days to file plus one more extension of 30 days. From here they have to pass an order within 90 days. Sir, there is a difference of opinion, because there will be 2 people in authority for advance ruling. If there is a difference of opinion here, then it will be referred to triple AR. If there is a difference of opinion here, then it is deemed that advance ruling cannot be given. Deemed that advance ruling cannot be given. For what time will it be valid? Till the facts don't change, it will remain valid. Now, once we say that it will be remaining valid till the facts don't change, now to what extent are we saying? What is the time period for which it will remain? So, till the law doesn't change, till the facts don't change, there is no time limit given in the law. But what if someone has taken advance ruling by giving false documents, false information? Then it will be considered as void ab initio, and the time period spent in this advance ruling will be excluded for computing time limit to issue notice under 73-74. That means a new notice can be issued, and this is very, very dangerous then. Plus, what are the matters? See, all important matters are covered except place of supply, because all advance rulings are uh, states, based on state authorities. So place of supply is not considered. Otherwise, other than that, value, rate, that is classification, exemption notification, RCM notification, whether it is a supply, whether registration is required, what is the time of supply, what is the tax liability. For all these matters, a person can go for advance ruling. Yes. So beware of advance ruling. Just be a bit careful regarding these points, because it's important for the examination point of view. See you all in the next video.